Hey, everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing, and this is This Week in Disruption. So let's start off with what appears to be a Chinese company looking to IPO in the U.S. possibly this year.
The company is Beijing Momenta technology company, and they are working on self-driving technology, and one of their big investors is GM.
Last year, they tried to raise $1 billion, but that didn't kind of work out for them. So now they're hoping to raise $200 to $300 million in an IPO. The funny thing is, it's like if you needed $1 billion, then how would 200 or 300 million work? Well, no, we can make it work for 200 million. Why did you need $1 billion?
Yeah.
Goldman Sachs and UBS, along with China International Capital Corp, are also supporting Momenta. What that means is they're basically going to be bringing them to the public markets and getting paid to do it.
Momenta has partnered with BYD, and BYD has used Momenta's self-driving tech in their BYD Han EV.
The problem I have with Momenta is that they use LiDAR in their suite of sensors, and we should refresh our memories on why that's a bad idea. In 2019, Elon said, LiDAR is a fool's errand. Anyone relying on LiDAR is doomed. They are expensive sensors that are unnecessary.
And the reason that all these companies seem to use LiDAR, normally if everybody's doing it, it's because it's a good idea, right? The reason you use LiDAR is because it tells you distances. Right. And you don't have to do any work because the sensor already does the work for you. And that's really easy because if you're an engineer and you go, well, we need to know the distance of like a lot of like around the whole car all at once, LiDAR is like perfect because it just shoots out a laser and the laser bounces back and that tells you how far away the thing is.
It's kind of like if I told you to write a long-term paper, you could be like, I could either read and write and study for weeks, or I could use ChatGPT. I'll just use that. Right. Sure, it's the quick, easy solution, except that in the long run, it's not the right solution.
Right. And so it sets you off going really fast because you're like, great, we have all this data. We have a point cloud around the car. We just have to make sure that the car doesn't hit any of these points that aren't the ground. So we just label the ground and then all bada bing, bada boom, and perfect. The thing seems to fully self-drive, except unless there's like some other kind of thing that LiDAR is not very good at, which is anything from weather to understanding what objects are or reading signs or lots of different things.
Also, the fact that you need multiple LiDARs all over the car because each one can only read in a certain point cloud.
And so then that gets really expensive. And then you need a whole bunch of computers to interpolate the data. And that gets really expensive and also energy intensive, which means that now your car is using about 1 kilowatt of energy just to run the computers.
Yeah, next time you're looking into one of these companies that does autonomous driving,
look in the trunk.
Look in the trunk because that's where you're going to see the whole trunk is filled with computers. And you're like, wait a minute, so what runs those? Oh, the battery of the car has to run not only the car now, but also this. So you're getting way less range.
Right.
So yeah, not going to work. And this is where I'm like, Jesse and I could start a autonomous driving company if it could use LiDAR. It just wouldn't work very well.
We would get off the ground because we would be able to show tests.
And we could, drive around like a Hollywood set or something that was heavily mapped.
And they do that a lot, right? And we've seen Cruise and other companies, they kind of do this where they're like, oh, we've got it working enough to where we think it kind of works, but they haven't gotten it to the point where Tesla's gotten it. And just as a little refresher, Tesla doesn't use LiDAR. They only use cameras. They've even gotten rid of radar. I mean, radar doesn't work the same way that light does. Right. So it's going to send out a radar beam, and then all of a sudden you're going to get like a huge reading back because some, a little soda can is pointed at your car and is reflecting the radar back. And then all of a sudden you have two sensors. You have one camera that everything looks normal, and then you have the radar going like, wait a minute, there's a giant tank in the middle of the road, stop, and you have to then program to be like, oh, that's what a soda can looks like, that's what a bridge looks like, that's what a kid doing a kickflip on his skateboard looks like. It's
unreliable data. You can't trust it.
Exactly. And it really doesn't matter what kind of sensors you use, right? Like it does, because obviously LiDAR is more expensive, but what you really need is tons and tons and tons and tons of training data.
Yeah.
And the problem with having very expensive LiDAR systems with very expensive computers that use a lot of power is that you can't put them in normal people's cars because they go, wait, I'm going to pay $30,000 to $50,000, maybe even $100,000 more for this car just because it's full of LiDAR and computers, and it won't have the same range.
I mean, let's talk about Waymo, right? You might be like, well, but Waymo's been doing it for a while. Their cars cost about $250,000, first of all, okay? That's just for a normal car plus all the sensors and stuff. Right. And then, have you ever taken a Waymo? The ride, I have not taken one personally, but I've watched a lot of videos, and the ride is really jerky and really unpleasant. As a rider, that's a big part of the ride is you don't want jerky and unpleasant. So again, if it's not going to drive you well, then it's kind of pointless.
Well, and also with Waymo, great. They have like, I don't know, maybe 100 cars. I'm going to be generous. Right. Let's say 100 cars. If they're driving 24/7, they're only going to be able to generate a certain number of miles per day. Right. Tesla produces every single one of their cars with all of the sensors that they need to be full self-driving, which means that you're able to collect data from cars that aren't even fully self-driving.
Exactly.
And you're not paying people to sit in the cars to drive them because they need these cars to drive to work because they are their cars. But the data is being sent back to Tesla HQ where they're able to use that data for training purposes. And training what, you may ask? Neural nets, AI. They're able to use that information to train the computer, which then makes the computer, just using cameras, really good at driving, and that is what Tesla has done.
But wait, Jesse, you just put expensive hardware in a car that they didn't pay for.
Except that they might have paid for it with full self-driving, and they probably will pay for it in the future.
Exactly. I mean, now that you can subscribe to it or just buy it outright, someday in the future, you'll turn that on, and that'll be another new revenue stream for Tesla.
If you look at most modern cars with all the modern features, they're covered with cameras anyway.
Right.
So all you've added really is a smart computer that can do the full self-driving, right, which Tesla has designed themselves to be vertically integrated and not that expensive. So let's go back to Momenta and their IPO. If and when Momenta IPOs, there will be a lot of press, right? Because these companies pay to blast their messaging everywhere.
So don't get too excited. And disclaimer, we're not financial advisors. Don't take our advice on whether to buy, Momenta or not if they IPO. We're just two dudes on the internet. Do your own research. But when that day comes, you are smart. You know that most companies working on FSD are not going to be successful.
Don't let the FOMO pull you in if the IPO happens. We've seen this before. Lots of different companies doing lots of different things. What they do is they come up with a schedule of press releases that they release to the press, and then the press runs their stories. It's basically free advertising, and a lot of times they're actually paying for this advertising to try and get this story out to you, to make sure that you understand their messaging and their marketing, and that this is a great buy, and that this is really exciting, and that you should be excited. And here's a different guy saying something. They're going to line all this up well in advance of the IPO because the IPO is money, 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 money. Okay? It's not just money for Momenta, it's money for the banks. Because the banks, when they bring this company public, they get a lot of money too.
Disruptive investing isn't just about finding disruptive companies to invest in. It's also staying clear of the companies that aren't going to disrupt. Very few companies do.
And so we just wanted to talk a little bit about full self-driving.
Well, and to your point of when a company IPOs, that is the big moment to get most of the money. Once the stock starts trading, yes, they will issue more shares down the road probably, but not for a while. And so that one moment, that one day where they sell all the shares, that's the day to make the money. That's why they put so much work and time into press releases to get that price up for the first few days. After that, they don't really care so much anymore because they got their money.
Right. You may say like, oh my God, look at all these IPOs and then the next day the stock price plummets. They don't care if they sold all of their shares. Now, sometimes they haven't, right? And so they've put these shares on the market. Hey, who wants to buy this? And if the stock price plummets enough, then it shows that there's too much supply, not enough demand. But a lot of times they're able to keep that high for a week, sell all their shares, and then they turn off the faucet in terms of money being spent to advertise to you for you to buy the stock, and then that's why the stock plummets. But they don't care by that point.
Right.
Would they like their stock to be high? Sure, but they already sold all their shares and they got all their money, so they're going to be good for like
a year.
It's usually like a year or 6 months, and then they go like, "Oh no,
we need to run more press releases."
Yeah, exactly.
All right, let's switch now to Rivian,
another company that IPO'd for a lot of money. Yeah. Rivian released their Q1 2024 results last week.
They had $1.2 billion in revenue, which was slightly better than some analysts expected to be, and a net loss of $1.45 billion.
Their EBITDA loss for the quarter was $798 million. Rivian delivered 13,588 vehicles in Q1, so doing the math, that is a loss per vehicle of $38,784. That is a gross margin of minus 44%.
So Rivian talks about how that's an improvement over the $43,000 $100,000 loss per vehicle in Q4 of 2023 and the $124,000 loss Ford per vehicle in Q4 of 2022. They quoted by saying, "We're making our way toward profitability." I'm not saying it's easy to mass produce a vehicle profitably. It's one of the hardest things there is to do. But come on, Rivian. The rate that you are improving is not fast enough. In fact, you've gone backwards a couple times. And if you can't eke out a profit after 3 years on the R1T and the R1S, which are high priced, how do you plan on making a profit as you ramp 3 new models, the R2, the R3, and the R3X?
Rivian is guiding for a, quote, modest gross profitability by the fourth quarter of this year.
Now, I highly doubt that will come to pass by then. They might hit their production guidance of 57,000 vehicles by the end of this year, although even that looks unlikely because just look how many they just made in Q1, 13,000. So they're going to have to ramp that up as well.
So how does Rivian think that they're going to get to profitability by the end of this year again?
Well, RJ Scaringe, the CEO, said the tooling upgrades we made in the Normal plant, the Normal Illinois plant, enable us the ability to increase our line rate by roughly 30%, which reduces our per unit labor and overhead costs. RJ said they installed nearly 600 new or modified robots on the R1 lines. And RJ pulled out all of these kind of accolades that he could to put in this R1, this Q1 report, like that according to J.D. Power, the Rivian R1S was the best-selling EV in the U.S. for over $70,000 in Q1. And I was like,
they have a category for that?
No, but they just picked out a number and they just squeezed in like for over this amount. And
so they looked at the JD Power and they looked at the best-selling EVs and it was like Model Y, Model 3, probably even Model X, and then like Rivian R1S. And they were like, but if you account for the ones that cost over $70,000.
So I guess it eked out over the Model X.
I guess so.
But okay, great. So he did that. And then he said, Rivian reached a 5.1% market share during the quarter. That's according to data from CarEdge. Okay, great.
That's market share within the EV space?
Yeah.
Okay.
And that Rivian hit the milestone of selling 100,000 vehicles in Q1. These are all just fine little numbers to throw in there, but they're just kind of glossing over what the problems are. Rivian only has 11 locations in the US and Canada where customers can get to sit in a Rivian. So let me just say you're out there right now and you're like, I might want to buy a Rivian. What's the first thing you want to do is check it out. So you either need a friend who has one or a relative, or you need to go to a showroom. And if they only have 11, I'm guessing one's not near you.
Right.
Now, Rivian only has 59 service stations in the U.S. and Germany.
Germany?
Right. So remember the EDVs, the electric delivery vans?
Yes.
They are doing some of those in Europe. So if you break one in Europe, you have to go back to Germany to fix it.
Oh,
they have a service center there. So Rivian does have 530 mobile service vans, but less than half of the service that we've needed has been able to be done by mobile. And that's why we bought the R1T, to get the real picture for you guys. Because it sounds great. Oh, we've got mobile vans. We'll just come out and fix it. Well, half the time we call them to think, oh, no, we can't fix that with our mobile van. You have to bring it in to this really hard to reach location and then leave it there for 3 days. So like our tonneau cover, which they finally said they have a fix for, we've not been using it for a year because we're afraid to break it because it breaks. We have to bring it in, leave it for 2 days for them to repair it.
Yeah. Meanwhile, I've been stomping all over my Cybertruck's tonneau cover, and it moves so smoothly in and out, and people love it. I won't go off on a tangent, I promise. I was about to, but I won't. So Rivian did just get a commitment from Illinois for $827 million to expand their existing Normal Illinois factory for R2 production.
And I think this was actually a big deal. If Rivian had gone through with their plan to build the Georgia factory for the R2, not only would it have thrown their timeline way off, because, let's be honest here, there's no way they would have been able to complete the factory and get the R2 launched in the first half of 2026, which is what they say they want to do. And that leads me to the R2 and the R3. These are the lower price models that are supposed to save Rivian and get them to profitability. But what else is going to be happening around the end of 2025, beginning of 2026?
The Olympics? No, that's this year.
No, that's this year.
What?
The Tesla Robotaxi, right? The sub $25,000 vehicle Robotaxi. We don't know exactly yet because that's not going to be talked about till August 8th, but the launch of that. And at that same time, another electric vehicle is going to be launched that's wicked cheap, probably going to be autonomous, but yet Rivian's going to be like, hey, look at this really sexy R2 and R3. I just feel like at that point, game over, because one of them's going to drive autonomously, one of them isn't. Well, let me prove that part to you, right? There's been talk that Apple will partner with Rivian. Lots of rumor stories going around the past couple of weeks.
Partner for what? Like they're going to put like an iPod dock in the
Maybe.
Rivian.
No, I mean, the talk is that they would bring Apple's autonomous driving technology to Rivian, of course.
Apple has autonomous driving technology, I mean, but Apple spent $10 billion in years trying to make an EV, and they canceled it in February.
Yeah, but I mean, it makes for great headlines, right? Rivian partners with Apple. I mean, that's so sexy, Rivian and Apple together in the same sentence. Look, bottom line, Tesla is going to crush autonomy. We drive it now. We know that's true. Rivian does not have autonomy. Rivian has a driver assistance feature.
Apple autonomy.
Right. And Apple, I mean, wasn't able to even make an EV, let alone autonomy. So, I mean, Tesla is going to crush vertical integration. They're going to crush autonomy. They're going to crush mass production with machines that make machines. Don't forget about Tesla Bot. Rivian is going to have a hard time staying afloat. And, of course, as every quarter goes by, Rivian spends cash. And now they have $9 billion in cash. And you might be like, that's a big number. It is a big number. But last quarter, they had $10 billion in cash. Like the number's going down. The runway's running out.
Yeah.
They only have a certain, I would say, about 7-8 quarters left.
Isn't this just like Tesla, though? Shouldn't we be looking at this like we were looking at Tesla back in the day? You know, and all the analysts said that, oh, Tesla's going out of business. They can't make their cars profitably, blah, 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 blah. And we were going like, they're going to make their cars
profitably. But for some
profitably.
reason, everyone loves Rivian. Every analyst talks about how amazing it is. And it's like, but based on what? I mean, I know it looks cool. We have one. I like that. And there's some cool things about the truck. It's very powerful. But like compared to now we have a Cybertruck. Okay. So now we don't just get to say like, well, you know, a Cybertruck should be able to do this. We have one. Yes, it looks different. And if you're the kind of person who doesn't want to buy a Cybertruck because of the looks, maybe you'll buy a Rivian. But it's not in the same league. To me, it's orders of magnitude, not the same truck. And the real hope that Rivian has is the EDV, the electric delivery van, and this upcoming R2, R3, because that's cheaper. The problem is, until they can get the vertical integration down, and like Ford couldn't do it, Rivian can't do it, it's not easy to get the price down. And if I had seen that the last quarter, Q1, that Rivian had gotten their profit, you know, their minus profit down to 20,000 a vehicle or, you know, 25, but they're losing so much money per vehicle.
We haven't heard anything about the manufacturing. I know that, you know,
more robots.
RJ said that they'd have more robots, and that's great. But Tesla, when they talk about their cars, talk about like the Model Y, for example, how can they sell the Model Y for such little money, right? And now with this like APR of 0.99%, like, oh my goodness, it's a very affordable electric car. Which, if you remember, 5 years ago was impossible.
Right.
Everyone was just like, everyone's going to be buying $80,000, or not everyone's going to be buying $80,000 electric cars because it was too expensive. And no one's going to be able to afford these. The number of kids that have come up to me in my Cybertruck because they want to take a look at it, and they're like, oh yeah, my mom has a Model Y. I'm like, you're just like a kid. Like you don't have like an ascot and a monocle. You're just a average kid. The average people have Model Ys now. Why? How can Tesla do this? It's all in the manufacturing. They have freaking machines that make half of the car.
Well, let's talk about manufacturing. The U.S. government just kind of let all these manufacturers off the hook until 2027 and said like, well, it doesn't really matter what we said about what goes into your cars. You can all have the credit. Great. So they're all going to be like, okay. Don't have to worry about that. Yep. Except 2027 will be here, and that'll be roughly the time. I think actually the R2 and the R3 won't come out till 2027. When they do, those new guidelines will go into effect. Rivian won't be focusing on them. So at that point, they probably won't get the $7,500 tax credit. Maybe only half of it, if that.
Let's say that they do. Let's say that they hit we have enough minerals from the United States or whatever. It still won't make a difference because Tesla is existing, and Tesla, when they exist, make cheaper and cheaper electric vehicles. That is what they've been doing since the beginning. And so we have heard that they're going to be making a $25,000 vehicle, and Elon has tricked the market. I will say that he kind of tricked the market by saying like, yeah, we'll sell them to regular people. We're not just going to have them be robo-taxis that run on our network. And the market loves this. Oh, they're going to sell a $25,000 EV. That works into my math because I'm too old to understand what a robo-taxi is. So I'll just say, I know I can put a number in a box that says number of cars sold, and if it costs $25,000 and they get the tax credit, that I can work out what that is. I can't work out what a robo-taxi network would earn Tesla, but maybe I can. But no, I'm only going to do it. I'm only going to say that the people who buy full self-driving, as we've seen Bank of America say, so stupid, so like in the box thinking. Here's what we think it's worth. morons. It's worth like a couple $1 billion.
Well,
That's
and
great.
if you're like, well, Zach and Jesse, you think you're right. Prove it? Well, let's prove it with this next story.
Okay. We've been telling you this from day one. Fisker is in trouble.
Fisker just officially halted production of their Ocean EV at the Magna Steyr plant in Graz, Austria. And Fisker filed for a reorganization in Austria, which is similar to filing for Chapter 11 bankruptcy here in the US. So basically, Fisker has said that it will have to go bankrupt if it can't get more financing. And they just failed getting the financing they said they were trying to get, so they're going to have to find someone else. And in a related story, by the way, Fisker's founder and CEO is selling his 11,800 square foot ultra modern home in the Hollywood Hills of California, here it is, for $35 million.
That is, by the way, worth $10 million more than the entire company of Fisker right now. Fisker's share price is 5 cents per share, so that puts its market cap at $25 million. So the whole company wasn't even worth Fisker's house.
Fisker said in their Austrian reorg filing, by filing to open a restructuring proceeding via self-administration, Fisker Austria gains breathing room to protect its business while it conducts a value-maximizing strategic transaction or other sale of assets. Under court protection, the entity will continue to pay its employees and sell and service vehicles. Fisker's entities outside Austria are not included in this restructuring proceeding. Right. Fisker continues to diligently explore all available options to maximize the value of its global business. Basically, we're fucking screwed. Fisker is being suspended on the New York Stock Exchange for non-compliance because their stock price dropped below $1 for over 30 days. Fisker is warning of substantial job cuts soon. So this talk of being able to pay its employees, that's bullshit. And Magna Steyr, by the way, so that's the third party company that's making these, they announced that they will let go of 500 workers at their Graz plant in Austria because not only is the Fisker Ocean model being halted, but also the Jaguar E-Pace and the I-Pace, the BMW 5 Series are also being halted, and the BMW Z4 and the Toyota Supra will halt production in 2026.
Right.
All this talk about how EVs aren't taking over? Yes, they are. Yes, they are. Going back to Fisker, we've been saying this from day one. You can go back and watch all of our videos on it. We've said, there's something not right about this company. It's not going to work. You can't sell a car if you don't have servicing for it. People aren't stupid enough. Oh, wait, I'm sorry. Our buddy Rich Rebuilds, he bought one. I think that was more of a video.
I respect him for buying it because...
Yeah, but he's selling it now and no one will buy it.
Well, right. That's great content, though.
It's great content.
I mean, good for him.
It only works for YouTubers.
Right. For the average person, that would be a real big problem if you buy this car new and you're trying to sell it pretty much new.
Everyone who was thinking of buying the car said to Rich in the comments, I might buy it, except I have no way to get it serviced. And you're absolutely right. Where would you bring it? You're going to bring it to Tesla service? No. There's no parts, right? So even though someone knows how to fix it, there's no parts. So you're going to buy a car that's basically obsolete the day you bought it.
It's like going and buying like some really obscure old car. Even if you buy a DeLorean today, there's a company that can sell you the parts to fix your DeLorean. Right. So you go like, great, we have a 1975 MG Midget. We can still get parts for it. That's great. But if you buy a 2024 Fisker Ocean, you will not find anywhere to get parts for it unless you buy another Fisker Ocean, which might be the only way to do it, and then cobble the two together. Why are we talking about Fisker when we're talking about Rivian? Well, Fisker sells the Ocean with a starting price around $40,000.
Yeah.
Which is what Rivian wants to do with the R2.
And I mean, our Ocean is a good looking car. Like,
sure.
So it's not like it's a horrible looking car. And yet, you can't just make an EV and like, I'm done. Good. We're going to sell a lot. No, you have to beat Tesla.
And here's the other part. There is a really good parallel draw between Tesla in the early days and Rivian now in their early days, if you can call it early days. They've been around for quite a while. But let's say that they're even, neck and neck, but, from Tesla way back in the day. There were hardly any other electric cars back then. There were people who really wanted an electric car for the right reasons.
Yeah, you basically
green.
You had the Leaf and you had the i3, basically.
Right. And so you had the Leaf with a range of maybe 100 miles on a really good day, and the i3, which you could get the range extender, the gas range extender with the motorcycle engine in the back. Otherwise, it would be a 52, 62-ish mile range with the most narrowest tires in the world, basically bike tires. Or you could get a Model S, right? And it was very expensive, but it was the only game in town. Yep. And while Tesla wasn't making any money, they didn't have any competition, right? All the competition was coming Oh, 2020, we're going to be putting them out of business. By which time Tesla had the Model 3 and the Model Y and is putting all these other car companies out of business. So that's the difference in the story here, folks.
Yep.
If you're wondering, but why are you being so negative about Rivian now? It's because if Tesla was coming up and there was another Tesla that was years ahead of them, we wouldn't have been so positive about Elon Musk and this electric car company, because we would have been talking about the first electric car company, whatever that one would have been.
Especially if it had been as innovative as Tesla.
Exactly. Thank you so much for joining us on Disruptive Investing. I hope this gives you a little bit of insight into the disruption that happens in the market. It's hard to talk about disruption.
And the thing is, disruption, again, going back to the fact that we're not looking for just more and more disruptive companies. Sure, we are looking for them, but a lot of times we're looking to make sure we don't invest in companies that are not disruptive. Because if you invest in the wrong company, you're going to lose a lot of money, because you can lose 100% of your money.
Case in point, look at Fisker. Look at Rivian.
I mean, Fisker has dropped 99% in value.
Right. I feel like even a pair of shoes, you could wear them every day and wear them out. They could still have maybe a little bit more than 1% of the value of your original
The company is
spend.
worth less than his house.
It's insane.
Yeah. Which he has to sell now.
And
you wonder why.
That's why we're also talking about Momenta, because we know that there's going to be a huge push. And just like we had with Rivian, where it was just like, this company's the greatest, best new thing.
You're going to have so much FOMO because the press is so good. The analysts are so good at making you feel like you'll be left out if you don't get in on this. Just like you felt that way with Rivian, with Fisker, and maybe with Momenta. And it's like, only get FOMO if there's a reason for it. So do your research. Yeah. And that's why we have our investor club. So over on Patreon, if you want to join for $10 a month, you might be like, $10 a month? Sure. Investing takes time and money. We think it's one of the best values around. Going over there and being on our Slack, which is this exclusive place where you can talk to other smart investors who have already done a lot of this research, a lot of them, and who are diving deep on things that maybe you know nothing about. That could save you so much money if you don't get into a company you shouldn't, or get into a company you should. I offer you to go check it out for a month. If it's not what you like, stop subscribing. But that supports what we do, so that we can bring you these kinds of stories and hopefully save you from investing poorly, and hopefully get you into companies that are going to make you money.
And I can't wait to follow Momenta and see all the press that they're going to put out when we kind of know their business model and we know what Tesla's business model is.
Right.
And we can just see how it plays out from the sidelines, being able to look and see like, oh, that was the playbook that they adopted. So that way going forward, we can look for the same plays that they're going to make and hopefully avoid them for companies that are in a similar situation.
Another benefit of the Investor Club is we do Investor Club bonus stories every week. And this week, we're going to be talking about a company just like Momenta doing autonomous stuff that went out of business.
We'll see you over there. Thank you so much for watching Disruptive Investing. We'll see you next week.